The week concluded with persistent inflationary pressures evident, with CPI registering at 330.29. While the unemployment rate ticked up slightly to 4.3%, recent reports suggest underlying resilience in the U.S. labor market. The Fed rate stands at 3.64%, a level that contrasts with the ECB's increasing hawkishness, signaling a potential divergence in global monetary policy. Despite a robust GDP reading of 318,562.26, the broader macroeconomic landscape is increasingly shaped by geopolitical tensions and their tangible economic fallout. Macroeconomic trends this week were dominated by the ramifications of the ongoing conflict in Iran. This has significantly amplified commodity price concerns, pushing energy security to the forefront of investment decisions. We're seeing a clear pivot towards clean energy, driven by both environmental goals and a strategic imperative for energy independence. The threat of rising protectionism, exemplified by new tariff rhetoric, adds another layer of complexity, potentially impacting global trade flows and supply chains, already strained by geopolitical events. Key headlines underscored these themes. Detroit carmakers issued a stark warning of a $5 billion commodity shock due to the Iran war, a sentiment echoed by ExxonMobil's CEO anticipating higher oil prices, and Barclays lifting its 2026 Brent forecast to $100. This has directly fueled investor appetite for clean energy solutions. Geopolitically, Britain's evolving seven-party political landscape and accelerating re-Grexit among wealthier national trade policy. The airline sector saw a dramatic event with Spirit Airlines shutting down, ending an era of discount travel, potentially impacting future airfare dynamics. Corporate earnings, however, showed pockets of strength, with Berkshire Hathaway reporting increased profits and Apple stock gaining on strong demand guidance. Looking ahead, market focus will remain acutely on the trajectory of the Iran conflict and its continued impact on global commodity markets, particularly oil and industrial metals. Central bank communications, especially from the ECB regarding further rate hikes, and any signals from the Fed on its future policy path given persistent inflation, will be crucial. Investors will also be keen to observe how corporate resilience holds up against rising input costs and potential demand shifts. Any further developments in trade policy or geopolitical escalations will warrant close monitoring. Next week's economic data releases, particularly any further inflation indicators, will provide additional clarity on the underlying health of the economy. Subscribe to the channel for weekly market updates. Bookmark